Hey, it's Matt coming at you. In this video, I'm going to talk about how to invest $1,000 and the best part, how to avoid taxes doing it. This is one piece of advice nobody talks about. So if you're excited to hear how to do it, please like this video, subscribe to the channel. I'll give you 2 seconds to do that. 1, 2, thank you. So people make money all the time, day traders, real estate investors, just someone owning their own business. And the biggest thing is that they're paying a lot in taxes every year, a ton. Whenever you make money, the government comes in and takes that money with taxes, up to 20 to 50% depending on your tax bracket. But with this investing strategy, you can avoid taxes 100%. Because the fact of the matter is, taxes can be the single biggest killer in long-term wealth. Let me explain a story and tell you what I mean. About 18 months ago, I quit my job I was teaching, and I quit my job to trade the stock market. I was really good when I was doing it. I turned my account from $3,000 to $25K 3 separate times. In total, that was $75,000 just using a $9,000 investment. Huge returns, very impressive, but huge taxes come with that too. And the crazy part is I could have avoided it all with this one investing strategy. Just to give you some context on how hard I got hit with taxes, just one of those moves from $3,000 to $25,000, that $22,000 difference, it's called capital gains. And because it was short-term capital gains, the tax rate was higher, about 30%. So that's $6,600 in taxes, and I did that 3 times. So that's almost $20,000 in taxes just for that 1 year. Imagine if you could avoid paying $20,000 in taxes. You could do so much with that. Buy a new car, maybe even go vacation in Europe for 3 months. I mean, it's a lot of money. And I'm going to teach you the one strategy to avoid it. It's called the Roth IRA. And I'm going to tell you how to use this step by step to avoid those huge taxes. And we're talking about investing $1,000. So you putting $1,000 into the market, you want to make it grow. And when it grows, you really don't want to pay taxes on it. And this is the one way around it. So if you don't know, a Roth IRA is a retirement account, meaning you put your money in, you can take it out when you retire, 59 and a half years old. There's some circumstances where you can take the money out earlier, maybe to buy a new house or buy a house for someone you know. Maybe you have medical bills, an emergency. There's many reasons why you could take it out earlier and not get penalized. But we're not going to talk about that. We're going to talk about what it is and how to utilize it. Here's simply how it works. You take your after-taxed dollars, meaning you work a W-2 income, maybe even 1099, and you pay taxes on that. So you pay taxes whenever you get a paycheck. That money you get after you pay taxes can go into this retirement account. You can put up to $6,000 into this retirement account every year. And here's the best part. When you sell anything in this retirement account, you don't have to pay taxes ever. Ever, ever, ever. That's so exciting. So let me just give you an example of how that is useful. Let's say the stock market has been crushing it, or some new stock you bought in your retirement account is doing well. Let's say they went up 100%. You want to take some profit because maybe you know it's overvalued, maybe you know it's coming down. At that point, if you take profit and you sell half or maybe all of it, you don't have to pay anything in taxes. As long as it stays in your retirement account, you can buy that stock again when it goes down. You don't have to pay taxes. I've been saying that a lot, but that's a huge deal. For example, if I trade in my regular account and I sell anything for a profit, the next tax year I have to pay 10 to 30% in short-term or long-term capital gains. But this account gets away from that. So I'm going to tell you step by step how to use it and how to set it up and what you should be looking to invest in. So step number 1, if you go to rothira.com, they have a bunch of websites at the bottom they recommend you using to open up an account. I use TD Ameritrade personally. You can check the link in my bio for that website. If you want to check out E-Trade, Fidelity, there's plenty of places to go open up an account. Opening an account is probably the hardest part, but once it's there, it's very easy to get that money in. All you have to do is set up automatic deposits. I suggest you set up automatic because it's something you're not going to think about. If you think about putting your money in, you're probably not going to do it. So you have to go to that website, apply for a Roth IRA, set up automatic deposits, and you want to maximize that $6,000 per year, because if you can put the maximum contribution on, then all that money working for you every year, making you money, making you dollars, you won't have to pay taxes on. So think about dollar bills as soldiers. The more soldiers you have in battle, the more they're going to work for you and the more money you're going to make. So you're going to want to maximize that $6,000 per year. And here's the best places to put your money once it's in your retirement account, because once it goes in there, the money's not working for you unless you invest into the market. And a lot of famous investors tell everyone to do the same thing. Warren Buffett, this is his favorite strategy. He's created so much wealth just from investing in stocks. And his strategy is just to invest in low-cost index funds, meaning the fee they charge every year is small, but you have the ability to diversify in many stocks. So I'm going to give you 2 index funds that are my favorite personally. I'm not a financial advisor. This isn't financial advice, just trying to help you look in the right direction. So my 2 favorites are the SPY and the triple Qs, QQQ. One of them is more tech-based, meaning it's going to contain more Amazon, Facebook, and Google. One of them just contains more of the overall market. So these 2 investments are going to track the overall economy really. So if the economy does well, then these 2 investments will do really well over time. So when you're investing in the stock market, especially in the index funds like the SPY and the triple Q, you're investing in the US. So if you don't think the nation is going to do well over time, then you shouldn't be investing at all. And the next step is, once you have those automatic deposits, once you pick the index of your choice with the low fee, you just repeat that every month, every year for as long as you can. And here's the one caveat. If you make $122,000 a year, you can't open a Roth IRA. They do have a cap on who can get in and who can invest this much money. So if you're single or you're married, you can do this as well. You just got to make sure you're making less than $122,000 a year, which I'm assuming most of the people watching this video are, since the median income in the US is around $66,000. So if you're not excited and sold on the Roth IRA, let me tell you a scenario that makes sense. So if you put that $6,000 in per year for 35 years, so if you start when you're 20, when you're 55, you'll have $1 million in your retirement account. Here's the best part. When you take it out to retire, you don't have to pay anything in taxes. Nothing. Zero. Nada. So you can be a true millionaire when you retire just by using the Roth IRA. Let's compare this to a traditional stock investing account, or maybe a 401k, which is another retirement account. So if you use any of those 2, you're going to have to pay anywhere from 10 to 25 to 30% in taxes. So on $1 million, that could be $100,000 or $300,000. So you tell me, what do you want to do? Do you want to hit $1 million and then pay $300,000? Or do you want to hit $1 million and pay nothing? It's an easy choice. And if you invest in the stock market for 35 years, you can expect an 8% return. Doing that will guarantee you $1 million in 35 years. So just to recap how to invest $1,000 into the stock market, you want to use a Roth IRA. If you're not, you're just going to get hit with taxes, and you're not going to be able to sell things because you're going to be worried about paying taxes when you sell. But you don't have to be worried about selling in a Roth IRA. You can actually day trade in there, swing trade in there, while paying no taxes ever. And let's just go over the steps on how to set it up really quickly. Step number 1, head to TD Ameritrade, E-Trade, Fidelity. There's a bunch of different accounts out there. Just pick one, and you have to apply for the Roth IRA. So you have to put your income in, because if it's too high, you're going to be rejected, specifically $122,000 a year. Once you put that in and you get accepted, you really want to set up those automatic deposits. So you want to be putting $500 in each month every year. That's that $6,000 I'm talking about. If you do this for 35 years, you can be a millionaire. but you have to pick the right investment. So we have the indexes. I told you two of my favorite, the SPY and the Triple Q. Those two follow the overall market. So if you just want to be safe and you hopefully want to have the historical returns of the stock market, which is anywhere between 6 to 8%, then you should be looking towards the indexes. It mitigates your risk and helps you diversify your portfolio while only owning one thing. So once you have this automatic deposit set up, you just buy the index every time the money comes in, and that's it. You repeat that for 35 years, and there you go, $1 million. And if you want more videos on how to invest $100, maybe even $500, click the videos to the right of me. I think you're going to love them. And if you want to trade with me personally, 7 days for free, link below that. Matt signing off. Peace.